Just a couple of years back, the metaverse felt like it was the next big thing, right? An immersive, digital universe that was just around the corner. I mean, it was the big tech story. We're talking billions of dollars and countless headlines, all focused on building this new reality.
Right, so let's get into it, because that is the big question. The hype was absolutely enormous, the promises were grand, and then it feels like the conversation just vanished. So in this explainer, we're going to break down that boom, the bust that followed, and what the future might actually look like for these virtual worlds.
And really, these two charts tell the whole story. On the left, you see Google's searches for Metaverse. They shot straight up in late 2021 and then just fell off a cliff. And on the right, the value of Metaverse crypto tokens did the exact same thing. It was a classic hype cycle, a sort of digital gold rush that left a lot of people wondering if there was any gold there to begin with. Okay, so to really get to the bottom of all this, we're going to break it down into 5 parts. First, we'll look at the original promise. Then, we'll dive into the hype and the crash. From there, we'll get into the real-world challenges of building this stuff, try to separate the real game changers from the gimmicks, and finally, we'll tackle the huge question of how you build a whole new digital economy.
So, let's start at square one. When we strip away all the buzzwords, what is the metaverse actually supposed to be?
Well, the core idea, and this is pretty cool, it actually comes from science fiction, from Neil Stephenson's novel Snow Crash. It's this idea of a persistent shared virtual space. Think of it less like a single app or a game and more like a 3D version of the entire internet, where you exist as an avatar. What's really interesting is that in the book, it was kind of an escape from a pretty bleak corporate-run reality. And that desire for a better digital world, it still drives a lot of the conversation today.
Okay, this slide is really important because it shows the metaverse isn't just one thing. It's this entire ecosystem of technologies. See, at the top you have the experiences we actually care about, like gaming, education, shopping. But to make any of that work, you need all these other layers. You need the hardware, right? The VR headsets. Underneath that, you need the serious infrastructure, 5G, cloud computing, and then there's the glue holding it all together, things like secure payments and digital identity. When you see it all laid out like this, you realize just how unbelievably massive and complex this whole project is. Every single one of these layers has to work, and work together, perfectly.
And, all that complexity didn't seem to stop this insane wave of investment from flooding the market. Which brings us to the real heart of the story, the dizzying hype and, well, the inevitable crash.
I mean, just look at this number. In 2021 alone, just 1 year, over $120 billion got poured into AR and VR tech. This wasn't just a few people being optimistic. This was an all-out investment frenzy. Big tech, venture capital, everyone was betting the farm on a virtual future.
And this is what was fueling that fire. You had projections like this one, predicting a market opportunity of up to $4.4 trillion by 2030. Now, we should remember, as the source material points out, these consulting firms have a vested interest in selling metaverse services, so these numbers might have been, let's just say, extremely optimistic. But boy, did they capture the imagination of investors.
And then the brutal hangover. After Meta poured billions and billions into its flagship platform, Horizon Worlds, an investigator found that in mid-2023, it had just 900 daily users. 900. That gap between the trillion-dollar dream and the on-the-ground reality, it's not just a gap, it's a canyon. The worlds were built, but pretty much nobody showed up.
So, the big question is, why? Why didn't people show up? To understand that, we have to move away from the money and look at the tech. We've got to see what it's actually like for the people in the trenches, the ones trying to build these things.
If you talk to the developers, the people actually coding these worlds, they'll tell you it's a battle on multiple fronts. The hardware, it's just not quite there yet. Headsets are clunky, they don't have enough power. The networks can't always keep up, so you get lag, which completely shatters the illusion. And then there's the massive job of just creating enough interesting stuff to do so people actually want to come back. And that's before you even get to the huge challenges of security and trying to get all these different separate platforms to actually talk to each other.
In this quote from a developer, man, it just says it all. You want your virtual world to look incredible, photorealistic, but you also need it to run so smoothly that it doesn't make people feel sick. Trying to do both of those things at the same time, especially on the hardware we have today, is just an insane balancing act.
Then there's security, which is this constant, never-ending battle. As this developer points out, these virtual worlds are a massive target for hackers and scammers. You have to protect user data, you have to prevent fraud, you have to secure digital items. It requires non-stop work. one big security breach could completely destroy trust in a platform forever.
And finally, you've got this nightmare of interoperability. The big dream, right, is this seamless web of connected worlds. But the reality today is a bunch of closed-off, walled gardens. Like this developer says, just getting your app to work on a VR headset and a PC and a mobile phone is a total mess, let alone trying to let people move their avatars and their stuff from one company's world to another's.
Okay, so after all those challenges, you might be thinking this whole thing is a lost cause. But it's not that simple. If we can look past the crazy hype and the gimmicks, like selling virtual plots of land, we can actually start to see where the real, tangible value might come from.
Let's take education, for example. The pandemic was basically this huge, unplanned global experiment in remote learning. And as you can see here, downloads for apps like Zoom and Duolingo just exploded. We proved that remote education can actually work at a huge scale. So the next logical question is, can we take it from a 2D video call and make it a truly immersive, interactive, virtual classroom?
And the potential in healthcare is honestly mind-blowing. Imagine a world where it doesn't matter where you live. A patient in a small town could have a consultation with a top specialist in a virtual clinic. Or think about surgeons training for incredibly complex operations using super realistic AR and VR simulations. There are even proven therapies, like using VR to help people overcome phobias. These aren't just cool ideas. They're applications that could genuinely change lives. And look, the more realistic economic projections are starting to reflect this shift toward actual real-world uses. Yeah, of course, gaming and e-commerce are still going to be huge markets, but what's really telling here is the massive potential that's now being identified in areas like health, education, and the workplace. It suggests the long-term value isn't going to come from speculative bubbles, but from building tools that are genuinely useful. Okay, so if we're going to build this thriving virtual world with actual services that people use, we're going to need a way to pay for things. And this brings us to the final and maybe the most important piece of the puzzle. How in the world do you build a working digital economy?
So right now, we're basically looking at two completely different ways to build this economy. On one side, you have the centralized model. Think Roblox. One company owns the platform, controls the currency, everything. It's stable, sure, but your money and your items are totally locked in. Then you have the other side, the decentralized Web3 dream, this open world built on crypto, where you truly own your assets and can take them anywhere. It promises all this freedom, but it comes with one massive, potentially deal-breaking problem.
And that big problem? It's right here on this chart. Insane volatility. This compares the price of Metaverse tokens like Mana and Sand to the regular stock market. It's not even a contest. These things act less like a stable currency and more like a wild, speculative lottery ticket. You just can't build a reliable economy for things like education or healthcare on a foundation that can lose 80% of its value in a couple of months.
And this brings us to a really fascinating idea. What if the financial foundation for the metaverse has nothing to do with crypto at all? Instead of these super volatile tokens, we could see other things take over, like central bank digital currencies. Or we could see existing national payment systems, like Brazil's incredibly successful PIX system, get linked together. The goal is to build a payment system on something that's stable, secure, and fast, the kind of thing a real global economy actually needs to function.
So after the hype, after the hangover, this is kind of where we are. That grand vision of one single immersive metaverse, that's still way off in the distance. But the individual pieces are still being built, just more quietly now. The challenge has really shifted from wild speculation to creating actual utility. The next digital world is coming. The only question left is the most important one. And it's not about the technology, it's about us. Are we going to build it as an open, public space for everyone? Or are we just going to end up with a bunch of shiny, corporate-owned theme parks?